Yo, what's up? It's J2O, man. You already know we out here. It's another podcast episode 4. Let's talk about the number one question for today. Why is the Forex market better than the stocks market? Why? Why? Why trade Forex versus trade stocks? Why trade stocks versus trading Forex? Many people don't know about Forex, but many people know about stocks. People grow up learning about stocks, like, oh yeah, we have a 401k or buy different stocks and companies like Apple, um, Tesla, this, that, and third. But many people don't really understand there's also the Forex market. And let's get into it right now. So you have the Forex market, which is a global, decentralized, over-the-counter market for the trading of currencies. This market determines foreign exchange rates for every currency, includes all aspects of buying, selling, and exchanging currencies at current or determined prices. In terms of trading volume, is by far the largest market in the world, followed by the credit market. The foreign exchange market averaged about $6.6 trillion per day that's being traded. $1 trillion being traded every day when the market's open. It's a lot of money. You don't need all trillion. Some of you guys will love to have 100 or 1,000, or a couple thousand, which is possible through Forex. But then you have the stock market, which is aggression of buyers and sellers of stocks, which represent ownership of claims on businesses. This may include securities listed on a public stock exchange, as well as stocks that is only traded privately, such as shares of private companies, which are sold to investors through equity crowdfunding platforms. Usually, everyone knows stocks is for the big boys because you need a lot of money to make money, buy a lot of shares to make money, and it takes over time. People that hold a stock for years, many people have stocks as a retirement goal where they buy a lot of shares. And let's say they get Apple right now in 2020, and they hoping by 2020 they buy a lot of shares and the price goes up. So therefore, what they have in the stock's value is high, where they're able to eventually sell when the time's right. But there's also things that happen, economic events. I know '08, the market crashed, and a lot of people lost a lot of money because they had a lot of money in stocks, and many portfolios were hurt. So stocks can be risky, and it's a long-term gain. And you need a lot of money to buy these shares, because these companies' shares are going up, especially the good ones like Tesla, Amazon, and so on. But then if you want to know Forex for the stocks, the difference, stock trading involves buying and selling shares of individual companies, whereas Forex trading involves exchanging, buying, selling simultaneously between two different countries. Forex trading is conducted 24 hours a day, and if you trade cryptocurrency, that's 24/7, every day. And for Forex trading, it's 24 hours a day, and contrasts to stock trading that operates on a much more limited time frame and it's only during weekdays. Part of the reason for this is that Forex trading does not rely on any central exchange with a physical location, but rather occurs global over electronic communication networks. So electronically, people just make a transaction all over the world. That's why Forex is very, very lucrative. And also the amount of leverage available in Forex trading is overwhelming compared to that in stock trading, which can make Forex trading both incredibly lucrative and also incredibly risky. And based on my experience, I took $100 and made it 1,000 in one day, really a couple minutes. I made 800 and made that to 6K in a couple minutes using the power of leverage that you're able to with these Forex broker accounts, especially if you do offshore brokers where they offer great leverages where you can make a lot or lose a lot. So, but I done it, so I know it's possible you can make all this money real quick. But I also lost a lot, where I know you can really lose money if you don't have good risk management when you trade. And also, like, the types of news that influence the prices of Forex and stocks are also different somewhat, because Forex prices are like predominantly shifted by global news, whereas like stock prices are mostly often respond to news about the company underlining the stock or its respective sector. For example, let's say a company like, I'm just a random company like Google. Let's say if there's like a scandal in the company, the stock's gonna go down. Let's say there's like a fair or leadership doing like malpractice, then the stocks could go down on that company because it's based on company news. But Forex, like things that happen in the world, for example, the coronavirus affects the markets. People who traded USD JPY pairs, it's been dropping because this whole virus. So the yen is going down. Gold's been going up, and the Dow. People trade the US 30, Dow Jones on the Forex market. It's been dropping like crazy because of what's been happening with this like news and the global news and crisis. So if you understand stuff like that, like fundamental analysis, you bring a lot of money in the markets. And I would say if you want to learn more, definitely follow me to learn more. And also please subscribe. I'm going to try to put more content on my channel and also continue to bring and add value. But that concludes my brief episode for today. Take care, everybody.